Sorry, this is right. Josh, I need a new thumbnail since you don't have a beard anymore. I need an updated photo of you.
Here, take a
I don't
screenshot.
recognize that person.
All right, we're live on YouTube. It's so funny because it takes a second to kick off, and I'm sitting here on my end waiting, like, is it going to go? Is it going to go? And then it actually goes, and it captured like the 10 seconds of things that we were talking about. So, of course, you guys heard the commentary on the new clean shaven look. Here's a screenshot for you if you want it, Chris. All right. You know he captured that. Let's dive on in here. Welcome back, guys. I'm glad you've joined in for our Thursday trading show. We've got the one, the only Scott Landers in the house today. Woo, woo. Scott, I think, is just going to maybe become a permanent fixture. Or maybe Scott will take over the show and I can have a day off or two. Here's our agenda for what we're going to talk through today. I want to do a market update and just take a look at things. Chris has been doing a great job getting those market updates out on YouTube, but we're here live. You guys can ask questions about it. That's one advantage of doing it on the show. And then we want to talk about how to find great trades, or at the very least, good stocks to trade. We've had some interesting discussions going on with the TSU Discord. And I want to address that issue because I think a lot of people that are just beginning trades, or even some people that are seasoned traders, don't necessarily know what qualifies a good trade or a bad trade. So, or a good stock or a bad stock even. So we're going to talk about that. And then we're gonna let Scott bestow upon us his genius as well. And Scott, feel free to interject wherever you want. So we're just coming over from group coaching. If you're unfamiliar with group coaching at Trade Smart, that's part of the benefits of joining the Foundations of Trading series. Every Thursday, we get together at noon Eastern Standard Time, and we put into practice what we were just learning that week in our trades. So we were taking a look at Coca-Cola there and doing some analysis on Coke. Let's come over to the S&P 500, though. Last week, I think it was, Scott was teaching us about the Fed boxes here. And if you're in any of Scott's teachings, you know he's got a lot more Fed boxes on his chart than I do. Is he's famous for saying it's the largest hedge fund out there. When the Fed makes moves, the market moves. And so that's what we're keeping an eye on. What I'm interested in, though, is these two candlesticks right here. Today's excluded. This is real-time chart. But those two candlesticks right there have my attention because if you're a student of candlestick patterns, in my opinion, and there could be some that disagree out there, in my opinion, those look awfully hangman-y. A classical hangman pattern would be more of a flat-topped candlestick with a long lower wick. And these obviously have little wicks on tops, and the lower wick may not be as long as some people would like. But I think the essence of the hangman is there, a bit like this hangman back here. We were trading on up. We were in an updraft on the momentum of the market. Boom, hangman after a gap, by the way. And then where we go, right back, rinse and repeat to where we were headed in the first place. So I think this could pose a problem for some of the bullishness out there. I was looking at the deep sky artificial intelligence earlier today. It's also bearish. It was very bearish yesterday. It got it right yesterday. We'll see what it does today as well. But so far, we're headed in that direction. And the way that informs my trades, I was looking at a potential morning glory this morning as a strategy. We didn't gap quite far enough for it to be a perfectly qualified morning glory. But beyond that, even if it had gapped enough, I stayed out of that trade because I just didn't want to trade bullish. It's a contrary trade. It would have been a bullish setup. I didn't want to trade bullish in the face of these two bearish hangman patterns. Also, as I look left on the chart, we have so much congestion that's been happening in through here, whether you wanted to say this was the resistance or you're trying to line up some of these pivot points here, or even this one down here, just a lot of congestion. Another Scottism. I say this when he's here live, so he feels like we talk about him all the time behind his back, which we kind of do if we're honest about it. Another thing Scott likes to say is price has memory. And if our memory is more short term, there's a lot of decisions that happened around 460. This is, of course, the ETF. We could come over to SPX, the actual index, 4,600. Either one, they're both showing you the same information here. So that's definitely got my attention. I'm going to go through some indicators. That's what we've been learning about in Foundation, and just see if they inform our decision any differently. And then Scott or Chris, if you guys want to chime in fact, you can even take over the screen and share your thoughts as well. Your simple moving averages are starting to trend sideways. And that's occurring because if you think about it, really, since September, we haven't gone anywhere in the market. We tried to go up, that didn't work. We tried to go down, that didn't work. We tried to go up again, that didn't work. We tried to go down again, that didn't work. Now we're trying to back up again thing. Where are we going to go from here? I don't know. But the moving averages are saying we're going sideways. That is a consolidating market, and it does not typically last that long. If we just look over time, there's not that many points where the market goes sideways. You got to come back almost all the way to 2018 actually, where you see for any duration of time, the 100 simple was going sideways, and it was kind of that back and forth. And, to that end, if we're kind of looking here and we're letting the past inform our current trading decisions, doesn't that sort of look a lot like about where we were right here? One difference is we did break slightly above the 100 in current events, where the 100 became resistance there. But I wouldn't read too much into that. In a sideways market, the simple moving averages are not as beneficial as they would be in a trending market. And I'm just saying, I've thought for a while that, this was a little bit premature. And even if the ultimate is that we're going to take off like a SpaceX rocket into outer space, I felt like we needed to have a little bit of a pullback where the institutions start buying some stock that are on sale, and they shake out some of those retail traders with a little bit of a head fake. That's just experience and preference. That's not technical analysis, but that and $10 will buy you a coffee at Starbucks. Here's your exponential moving averages. Now, these are still recovering a little bit from this sharp downtrend and then back uptrend again. I wouldn't read quite as much into these maybe as you would some of the other indicators. It'll be interesting to see if this 10 starts to act as support, or maybe the 50. If I was going to trust any of them, I'd be looking at the 50 right now. But I think the 10 and the 20, you can think of this as like an airplane that's just flown through some turbulence. And if you were sitting in the cockpit of the airplane, just imagine with that compass, not a digital compass, but the old school compass that was in the liquid. It's kind of like, it's just figuring out which way is north as you've come through some turbulence. And this is turbulence right here. This sharp downturn, and then the V bottom. I hesitate to call it that because it's not exactly, but it was a sharp bottom. We're still, these indicators are still coming out of that turbulence. The 50's probably recovered. The 10 and the 20, I think, are maybe a little bit aggressive there and giving us some potentially false information. Now, what is stellar in a sideways market? Everybody say stellar. What's stellar in a sideways market are indicators like stochastic. And typically you'll hear me say when I pull up stochastic can stay overbought a lot longer than you can stay solvent. Just look at that. Unless it's a sideways market. In a consolidating market, stochastic will go back and forth along with price amazingly well. So if you're keeping an eye on this and you see stochastic start coming down through 80, that's a good sign that we've got a little bit of retracement opportunity in us. I'm not trying to sound all bearish here. I've not see this in context. I very much could see a little pullback that looks like that. In fact, if we put Scott's Fed boxes on here, I got to go back to the SPY. A pullback that I just drew would correlate right about with that box, which is interestingly enough where we pulled back to just about a week and a half ago in price action as well. So I'm not forecasting doom and gloom. I know there's a lot of conversation about the 10-2 inversion and all that stuff. We trade what we see on the charts, and I'm seeing possibly retracement, not a crash right now. MACD is not telling me anything in terms of divergence here per se. Is that true? This actually would be like bullish divergence, not like, let me say that. This is bullish divergence. Remember, on bullish divergence, you want to be measuring the valleys, not the peaks. So you definitely have bullish divergence there. That's informing the bullishness behind this move. And, that would fall in line with a pullback and then a bounce up. It's just saying, hey, we're kind of, things are looking up. if we can use that phraseology. And then RSI, we can't skip RSI. I told the group earlier, I'm trying to warm back up to the RSI. I think the formula is absolutely brilliant. I've just gotten out of the habit. I like stochastic so much. I got out of the habit of using RSI. But RSI is definitely seeing some momentum pickup as well. And it's not even classically overbought yet. So we've got headroom here. And like stochastic, it can hang out overbought. Not typically quite as long. If we zoom out, you don't see those big long stretches where it's over 70, not 80, but 70, like we do on stochastic necessarily. But it does tend to oscillate back and forth. You also can draw chart patterns on RSI. I'll point this one out here. You saw a head and shoulders pattern show up, which informed us that momentum was falling off. Look how early that came compared to price action momentum turning over. So that was interesting. So keep in mind, you can also draw chart patterns on the RSI. It works better on RSI than on stochastic. Last but not least, the Bollinger Bands. Bollinger Bands, I have definitely grown to love as well. There's nothing that says slow down on the Bollinger Band yet. Top band going up, bottom band's going down. Don't freak out about stocks going up, or the S&P in this case. We're not outside the band. Nothing is unsustainable. Where I start getting a little bit nervous about aggressive moves would be this scenario here, where price starts to pull away from the band. See, we started turning sideways, couldn't quite get up in the band, then we fell down. Or if price action got outside the band, like where'd it go? I just moved it right there. Price action got outside the band, and that means we basically went sideways and then down for a couple weeks thereafter. So remember, the bands are designed as a statistical tool to contain. And if price action gets outside the band, that either means one of two things. It's either going to go wildly trendy in the direction that it's breaking out, and that happens. My experience more times than not is it's a signal of unsustainable trajectory, and it usually gets sucked right back down in and either goes sideways or can even set up for a bit of a retracement. So that's my thoughts on the market. Chris or Scott, you guys have any different thoughts the way you guys see it?
I'll let Scott go. He just posted some interesting levels in there. Scott, if you have those on a chart, it might be cool to see those visually as well.
Yeah, I'll see if I can't do that. Let me talk about a few things. I'll go ahead and post this at least while this is Bitcoin, and I'll indulge me just a minute here, guys. So we are end of Q1 today, right? A lot of rebalancing going the past couple of days. And as a reminder, there are technical things kind of happening in the market right now related to rebalance. And then we'll launch into Q2 tomorrow. And that rebalancing can create some definite shifts in movement in stocks. So that's why I keep reminding everybody, please be super mindful of your slope coming up. And I know this is Bitcoin. Be mindful of your slope coming up in these things, and how that's going to impact things. We've talked about that in Coffee and Cash this week several times, and the boot camp stuff and all that. So I'll mention that. While we're here, Bitcoin, I won't be surprised to see us hit 44,327 and a retest at some point on that one. And I want to remind a couple of things along with this, and I'll go to the ES levels as soon as I figure out where I put this. I said it in Discord, and we talk about this all the time in Traction. Frame it before you trade it. So this was framed before we got to this point right here on Valero. And so I know that's a trigger spot where it should bounce and go. Well, you can get an idea that price is roughly 95 and change. And you see where we're sitting right now. The reason I share this is because my son at his school is part of a financial investment group that they manage the fund for the school, and they have their CIOs and all that go with it. And he kept saying, Dad, they want to get out. They want to get out. This has been weeks ago. I said, they're not going to listen to me because I'm not a student, and that's what they're supposed to do and all that. And they don't use technicals, and I want to pull my hair out. I said, she's going to 100. And I texted him yesterday. I said, 100, whatever. And it's like, you can break it down, and we can see this on the charts, guys. But if you want to say, okay, well, what would Valero have to do right now? And this goes back to framing it, whether it's a daily chart, an intraday chart, whatever. If I cannot break that blue, thick cyan line, I'm not telling you we can't pull down. I'm trying to tell you there's not a trend shift until we get to that line. And if you will learn to frame things The good analogy to this, the baseball player goes up to swing the bat, right? He's up at the plate. Are you thinking about where it's going or what you're actually doing so that it will go and make contact? Most of us in life, when you let fear run you, you're worried about the outcome, not the process. You'll focus on the process. You think Tiger Woods or any great Jordan, pick whoever you want to pick. You think they're missing a shot before they take the shot? No, do the process. What did John Wooden do? He had these kids repeat the same process over and over in a correct manner. It's like do 100 free throws without missing one. Do the process correctly. Quit worrying about the outcome. Worry about what's right here, right now. Josh said this earlier. You got to focus on trading what's in front of you here. And if from all the years of doing it, I've tried other things in my career of doing this for almost 4 decades. And that's why you hear us talk about these things, is to prevent you from going through those same mistakes. We've been down this road, and let's help you get in front of that if that's worth it. I guess I should show ES levels since I've sat there and posted them for everybody. Well, you haven't seen YouTube, but I'll do this really quick.
By the way, those Bitcoin levels you put on Discord were stellar, man. I imagine Babe Ruth like walking up to the plate being like, and then you just did it. Like it went, it's like you control Bitcoin.
I think the one that's gotten people the most with Bitcoin with me going back, I have a client who wanted to get in this way back. Stop. And
for those that want to join the Discord channel while Scott's getting this set up, if you're a TradeSmart student, specifically of Foundations of Trading, that's available to you. So make sure you message us and we'll get you put in that server. It's a hoot in there. I mean, we go live. We say interesting, probably moderately inappropriate things. It's amazing.
You would never.
That's just that when Scott's not there. Yeah. Yeah. I have kids in the background.
So this is diving out a client who wanted to get in at 10,000. Said, what do you think as it's breaking out? You know, we're heading that direction, whatever. And these were the 2 targets. And you can see the reaction, the containment, and then the next level. And you can see we've stalled out. You can see the reaction here. This has all been put out there long before, not hindsight, guys, and how this industry is. But I wasn't really looking at it until they sent me a text and said, hey, I needed to park some cash. You know, I want to go in Bitcoin. I'm like, okay. So those are the targets. Targets, guys, it just depends on who you are. That's a weekly chart. It's a long-term structure. Okay. It just depends on who you are. But remember, everything's a fractal. So I should show you guys ES since I posted the levels. Oops. I guess I should do that, huh? So these are some levels on ES longer term. And there's no doubt in my head we will see these down the road. So 4570, sorry, I don't have it marked up where you guys can see this real quick and easy, but I'll do this and put these in here. So 4570, I think it's 75, close enough. There's that one, right? We'll come, and again, we're looking smaller term, but some of these are longer term levels. So it depends on who you are and where you're trading right now. And I hate to bring up things in hindsight, but these are ones I'm looking at longer term as we go lower on ES in the market. 44.93, a couple more I'll put out here for you. 42.04.25. That didn't go right, Scott. Sorry, guys. Hang on. 42.04, 42.04.25. And then there'll be one more in here, and that's going to be 39.95.25. These are longer term. I know some of you scream at me for, oh, there's no way. Well, there's a way, all right. So something like this, we can go down daily and see if you want to get a little closer in. But these are longer term levels that'll have my attention. This was based off a shorter term time frame, this 4570. Yes, my day is a little bit delayed, but I'm showing you much longer term zones that I'm focused on. So if that helps people down the road, and there's no doubt in my head, we will see the 39.95.25. There's no doubt in my head, we will see that number. Don't ask me when, but we're going to see that number. We will see it. I hate to say that, but I'm not some skies falling. Don't interpret as I'm bearish right now. Don't interpret what I'm saying. I'm just giving you levels for down the road to focus on if you want to mark your charts with them. Okay.
Why are you sure that that's a level we're going to hit?
I can't talk about it. I can just post it.
Oh.
Don't shoot me. I'm just being very generous with the commentary on this, and I'm going to leave it there to keep me out of hot water down the road. But yeah, we'll there's no doubt in my head. I don't know how. And again, timing of these things. I have stuff, guys. Okay, so here's a simple trick that you can do. And this is not related to this one. And one of my best friends in the world argued with me on this. And then Scott was right and he wasn't, and it's okay. I would beg all of you, if you follow a major average, the S&P, the Qs, the diamonds, the IWMs, go back and you'll notice my chart has these marked. See the rectangles. Okay. If you look at these rectangles, these are not filled gaps. That's what this is. I'm going to expand it back out so you can see it. Just say, here we are. Unfilled gap, unfilled gap, unfilled, unfilled, unfilled. You will see those again. Those will get filled down the road. They do not like to leave major averages unfilled. You're like, blah, 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 Scott. Well, this happened in 07, 09. And I kept telling people, if you want downside bogey targets to go after, they're going to leave footprints behind. And
it's
sure
so funny
enough,
you say that. Did you see what I wrote in Discord this morning? I said the exact same thing about that gap from 2 days ago. I said it's going to continue to act as a magnet.
They are, especially on major averages. I cannot stress enough. Now, individual stocks, guys, be careful confusing that they have to in the individual stocks. But with your major averages, you're like, but Scott, it hasn't filled it. Great. The further up it goes, it gives me levels on the way down to focus on down the road. So that's why I point this out. I said it going in before 07, 09. This is all documented with hundreds of hours recordings over the period of time. And sure enough, when the bottom fell out, we went down to 667. Well, that's because we went there, Scott. But you had targets to go to. And when you don't fill gaps, guys, then you're probably seeing a shift in trend that's much stronger. So it works to both advantages. And I think, I've posted things like this publicly in the past, and people get annoyed by it because we're so short-term focused. But then pretend the market does start to come in really hard and you're anxious about where can it go to. Well, I'm giving you places to look at. And for those of you that code, you can code this to go look for unfilled gaps on dailies or weeklies. It's not just dailies. Look at it for weeklies. Weekly charts are more important than we all give time and credit because we have the attention span of a goldfish now, as they say. I mean, does that help?
Yeah,
amazing.
Definitely some cool info.
Yeah, it really does pay off valuable if somebody wants it to down the road. I can't stress enough, guys. We're about to start in Q2, new inflows, new cash flows. Are they going to take it down first or whatever? At some point, I'm going to try to demonstrate. A lot of you are probably familiar with the ideas, concepts when you're making all-time highs or 52-week highs. You let it pull back for a few days. Well, it's not just the pullback, guys. You can get into actually timing these things. We're not going to go there today because we just don't have that kind of time constraint. But at some point, Josh, I'll get with you and we'll see if we can't introduce that concept either through this or through a course or whatever. But there's actually ways to get into timing these things and getting a little more precision with them and expectations of what you should be looking for. So that gets programmed in algorithmically with a lot of people in the industry who actually trade quantified systems. So I hope that's helpful, but it's just a reminder that time really is important. Even unfilled gaps are a time construct. And we're so busy looking at the right-hand edge, we miss this. And if you don't want to get in all that, just look left and look at where price had memory in the past. I guarantee if Josh has a position on from this morning, I don't know if he does, but if he did, I guarantee he probably knows what he paid for the position. Anybody normally does, and so does everybody else. It's not just unique to you or me or this little group of us, talking right now.
Yeah. And as long as along the lines of price having memory, like people get trapped, and we had, this is actually a great segue to what I want to talk about next. There was a conversation that was going on in Discord yesterday about a short trade gone wild. It was a really challenging trade. And, people get trapped in these situations. Shorting is a little different because there's an exit to that. It's called a margin call and the broker kicks you out. But, more in bullish trades, like people get into a bullish trade and then the market comes back. And then when it rebounds back up, they feel that sense of relief and they'll trigger out of that trade just because they're happy at that point to break even. Like the euphoria of imagining their their 10x trade, one that Chris had recommended to him. I keep joking. Scott or Chris had a gigantically huge trade that happened a few months ago, and so I just keep joking with him, like, isn't every trade supposed to be like that, where you make 10,000% on one trade? But the point is, you go from the euphoria of being excited about the potential gain to the euphoria of, holy crap, I didn't just lose my shirt on this, and they exit. So there's two angles to that price has memory, which brings me to talking about how we find quality stocks to trade. And I want to give you guys some tips, or maybe I did a lot of talking earlier. Why don't I pass over to Chris to share some of his thoughts on how we just even pre-qualify? How's a trade get in the door even for us to consider? And what are the things that we need to be careful of and watch out for and stay away from?
Sure. Well, I'm sure the way that I find trades is totally different from how you find trades or how Scott finds trades. I think everyone kind of has their own set of qualifications that they look at on their charts. So for me, like, I used to do a lot more fundamental analysis than I do these days, although I'm still a big fan of, generally companies that are becoming more valuable, right? Like making more money are ones that traders and investors want to buy, right? If you're an investor, for example, for, like a long-term kind of approach, you're looking for something that is going to grow your money over time, right? So you're looking for a company that is going to be more valuable in the future than it was in the past. And generally that comes down to earnings, right? Because when you buy a company, you are participating in the profits of that company. So a company that is making more profits is going to grow its value over time versus a company that's not growing its profits, right? And the two examples that I always traditionally love to give of those was the Boston Beer Company, which is ticker SAM, versus Budweiser, Anheuser-Busch, which was ticker symbol BUD. And you can watch for years, Budweiser's stock price basically just went sideways. And if you look at their earnings, that's what their earnings did. You never knew if Budweiser was going to make more money, if they were going to lose or make less money than they did the quarter before. Like, their earnings were all over the place. And the stock price went all over the place. And then you look at the Boston Beer Company, and they just grow their earnings quarter after quarter after quarter after quarter, and the stock price just climbs up a wall. So that was one of the examples that I used. Now, I know lots of people don't care about fundamentals, so that could be, if you've got a longer term view, like if you're trading over a longer timeline, like more of the investing side of things, I think fundamentals become more important. If you're doing shorter term trading, I think they're less relevant. If you're a day trader, you don't give a shit about earnings, right? Like it doesn't matter on the day-to-day thing. So I think, you have to match up what you're looking for and kind of how you find trades to the time horizon that you want to be trading over. I guess that's what I would start with.
Yeah, I think that's great. So it's interesting. I think I've stretched Chris in the last couple of years towards technicals, and he's stretched me more towards fundamentals. I think there's value to both. I don't get on the bandwagon of one beating up the other. I think we can learn from both disciplines. One of the tools that I've developed over the time to keep myself out of hot water, and I'll share my screen here. I'm going to steal it from you, Scott. One of the simplest things you can do is just look at shares or stocks that are trading 1 million shares or more on any given day. In fact, if you see some of my screeners that I've got built in here, the Stoke crossing up through 20 screener being one of my little favorites, it's going to pre-qualify any of these stocks, or as having 1 million shares or more. So if I come over here to where my volume indication is, you can see on orange current events, it's at 1.7 on a rolling 10-day average. Any of these should be. Yeah, there's a stock called Chris. You ever trade Chris?
Not yet, but I'm about to.
Yeah, right. I think I'd short it if I were you. That's not trading advice. Don't do that. We haven't really looked at this stock, but looks like Chris is trading at about 3 million shares or so. And this is the actual filter, what it looks like, 1 million shares or more. So stocks that are under a million, I'm not saying there's never a good stock that you could trade, or like, what if it's 950,000, Josh? Hear the heartbeat behind this. The more shares that are traded, the more liquidity there is. And the more liquidity there is, the more it's going to normalize its behavior. It's just not going to go as bonkers. That's not a guarantee, but it is a generalization in a healthy way. Generalizing that stocks with more liquidity are going to trade more systematically. Also, it's going to prevent you from having any issues of getting in or out of the trade. Now, if you're trading a share or two, it's not going to be a big deal. You're trading 500 shares and you want to put a limit order in and target a specific price where you're getting out, as most pro traders want to do, you're going to run into some problems. It's called slippage. The difference between where you get in and where you can actually, or excuse me, where you want to get in and where you actually get in, and vice versa, where you get out where you want to get out. You may run into a scenario where there's not people that are willing to sell or buy the shares that you're interested in acquiring or liquidating. So keep that volume up, trade 1 million shares or more. It's an immediate disqualification for me if it trades less than 1 million shares. What thoughts do you have on that, Scott? How do you not so much qualify a trade, but what disqualifies a stock in your opinion?
So we talked about this in Coffee and Cash this morning just a little bit, which is great because it goes right back to it. And I'll actually show you with mine what we were, not this one, but this is a good example. We were looking at what I call smoothness test. And so we looked at, this is Walgreens. And I'm not the biggest fan of Walgreens. Now, it's now called, whatever, is it Wabtec or whatever it is? Something like that. I think that's the right one.
They renamed Walgreens Waltec.
Is that the right one? Is it WAB now? I can't.
Isn't it WBA?
WBA, thank you. I was going to say, that doesn't look right. WBA, because I don't trade more. I used to trade, there we go, because I knew it's gapping. All right, so we look at this. I call it a smoothness test. So when you go look at your charts, don't with the Bollingers and all that, you see all these shadows, tails, wicks, depending on who you are and what you call them. If you're trading that, what happens? Oh, great, it's going, and then boom, right back down. I mean, they're closing literally about in the middle of the bar. Why do you want, now, if you're good at scalping that stuff, then you just take that momentum. But most of us want something that trades more smoothly. So what do I look for? I'm like Josh. I want a good average true range. I want at least 30 days ATR, at least in the modern era, of at least $3 or more. I want at least 1 million shares a day. And I want smoothness. And the smoothness boils back to, this is like NVIDIA. If you look at NVIDIA by comparison, it's not got a whole lot. It's not, there's not some shadows and tails, but the smoothest stock. So Walgreens, Bell South, before Ma Bell took her back over, had very smooth looking bars. Well, if you know that, then you know if it closes up and it's got a decent range, you're probably getting good intraday range. So you get a smoother wave that you're trading through. It takes out the indigestion of trading, unlike Walgreens or some of these other names. I don't like ADRs. I don't like ADSs because they tend to gap a whole lot and they don't have a lot of range intraday a lot of times. Not all of them, guys. I'm not making an absolute blanket statement. But I stay away from those because they become like little roach motels. It gaps one day, gaps the next. And if it's not trending, you're just stuck. But
what does that mean? ADRs or ADSs? What is that?
These are stocks they'll trade here that are basically a foreign, they're from another market side, so to speak. And so they're called an ADR because they're like, I guess, the receipts, the depository receipts for it.
Gotcha.
And so they're not, they may trade here. If I remember correctly, they're not technically based out, but they have a synthetic way of letting us trade them. And they'll call them ADRs, ADSs, and there's one more.
I have a really simple rule I forgot to add. If I don't understand it, I don't trade it. It's one of the reasons I stayed out of Bitcoin. I don't get foreign receipts. Like, how does that work? I'm not trading you. No,
so
bad idea.
Is BLP? There's one of them. It's going to drive me nuts. Anyway,
the other thing I wanted to clarify while you're looking that up. So you said ATR, which stands for average true range, above 3. Does above 3 mean like 3 or more? Like you want to see the volatility? Okay.
At least a minimum $3. Now, here's one thing I want to draw everybody's attention.
And is that before you go on? Is that a fixed dollar amount, or is that a percentage in your mind?
That's a dollar amount. It could be a percentage, because I have a way of then looking at that on a percentage basis. And so, like on bottom of my screen, you'll see in the bottom left corner down here in yellow, it has almost a $4 ATR over 30 days. So my rule of thumb is, if I'm going to actively day trade a stock and I'm going to do the 80-20 rule, which is I want to take, let's just say it's whatever, what is it, 392. So what's going to be, if you round off 20% of that, right, that's going to be basically 78 cents, 80 cents. If you're going to actively day trade and you don't have something that you can't pull 17 to 20% of its range out, then why are you trading it? Well, if that's a dollar stock, average range like Verizon, which is actually under $1, what's that going to be? 20% of that, 20 cents. Well, that doesn't have a lot of momentum. It doesn't have a lot of range, smoothness. Now compare this one to NVIDIA, which has, what is it, 15 now, $14. What do you think the odds are? So again, take your 14, multiply it 20%, that's $2.80. What do you think on a $14 average ATR, you get $2 to $3 a day consistently out of NVIDIA? That's a business model.
Where did 2% come from?
It's 80-20 rule. So I'm taking 20% times whatever, so $14. So what's that going to roughly be? $2 or $2.70, whatever I just said it was on 14. So roughly $2.80 on a $14 stock. On a $10 stock, $2. That way I'm not asking for the full move of the day. I'm coming in from a day trader mentality only. We could do the exact same logic. Let me just do this really quick. This is worth doing this. If we take this chart and I go to a weekly, the weekly range of NVIDIA has gone from what used to be closer to $10 to $29 now. Okay. Well, if that's the case and you're a swing trader and you're asking for a 30-point move, do you think that's realistic if that's the maximum move? It might be, it might not be. So why not say whatever, 20% of 30, whatever, $6. If you could do $6 in a week, would you be happy of NVIDIA? And if you could do that, 3/4 of a year out of NVIDIA on a weekly basis with wins and losses, would you have a good year? I'm systematizing this into a business model of I sell calculators. They cost me $5. I sell them for $35. I got $30 a margin. I'm trying to figure out what's realistic. And it's not a perfect science, but 80-20 tends to work a lot in the world we live in. So why not saying the same application to your trading? And we've proved this with the trader traction. I've shown 2 or 3 examples of this playing out, of saying we were looking for $3 and we wound up with $6. That's great when we get that, but it's a simple mathematical formula to get you to something that is realistic. And the same thing if you're an investor. If you're asking, here's a good example. Here's Verizon. Verizon has a $3.86 monthly range over 30 months. And you're asking for $10 in the next month. Is that even practically realistic, given I'm looking over how many years, back to almost 2000? It's setting a realistic expectation. Now, what I will also do to filter on top of this is, if I really want to spend time on a stock, I did with NVIDIA. NVIDIA's range has expanded. Okay, so its yearly is now whatever, $30. We know it's been through a big move. If the daily ATR is 14, and I would take that number, I would take that and go and look at it over 365 days. And I think it was closer to $8 for the past year. Well, do I want to go for a consistent $8, or I think I'm gonna get the 14? So I'm gonna take the 20% of the 8 or of the 14. Well, it depends. I think, I should be able to get 20% of $8 if that's the past year's range. If it's an expanding, then you have other tools to help maintain your trade, but I'm going after the bare minimum, guys. And if you still think the range is too much for what you're trying to get in a given day, then divide it by 2 again. But realistically, you should be able to get 20% of a stock that has some smoothness and good range intraday. And NVIDIA is one of these that does. You can get longs and shorts pretty consistently out of this chart most days. So that's just a simple way I go about it. But I want to have liquidity. I want to have range. I want to have movement. I don't need to go chase the next earnings stock. I like when earnings come out. It gives us catalysts. But I don't have to go hunt. So we're trying to help you guys transition into more of a business model approach, where you're building a batting average and you're not constantly swinging for the fences and coming up empty-handed, if that helps.
Yeah, that's so smart. Where were we talking about this earlier this week? About, it might have been in one of the foundations classes I was in. visualizing what you do as a trader as your job, which is ironic because a lot of us become traders to get out of a job, right? And I'm not necessarily advocating for that, but I'm also not saying it's not a possibility too, if you design this thing correctly. But I know my job is to come pull 2 to 3 R's out of the market every week and then exit. And if that happens on Tuesday, great. I'll take Wednesday through Friday off. At the same time, I don't go chasing R's too, because that's it's like Maslow's hierarchy, right? It is worse to go and chase trades than it is to, fulfill your outcome for the week. But if you start off the week and you say, my job is to go pull 2R out of the market, which at the current thresholds that I have the public TSU account at right now, that's 2%. I mean, y'all can go make 2% on your trades in a week. You're like, well, that's a layup, Josh. Like, that's all you're going to do. Y'all know if you make 2% every week on your trades, you will more than double your account by the end of the year. So if we were to say, who wants to double their account by the end of the year? Everybody's like, yep, I'll raise my hand for that class. And then we're like, okay, sweet. You just need to make 0.5% out of the market on Monday, Tuesday, Wednesday, and Thursday and take Friday off, or get 2% on Tuesday and take the rest of the week off, or whatever it is. It's very systematic, and it's attainable. You don't sit in front of your screen and say, I need to double or nothing on this trade. It's much more formulaic. What's the word you just used, Scott? What is it you just called it? It's a business approach, systematic approach.
And what you're bringing up, Josh, is, again, if you don't know the rule of 72, take 72 divided by your interest rate. So if you were getting 10% annually, every 7.2 years, you would double. Well, if he was doing 2% a week on the whole portfolio in 36 weeks, he's doubled the money. I've seen people who trade just options. They get their 8%. They're done. They're out.
Yep.
And they will grow accounts to 7 figures doing this. And I'm not trying to impress you. I'm trying to tell you what we know has been done and been documented with people out there. So why are you, it's like everybody wants to swing for the fences, as Raymond says, and I go grand slam, no one's on base. Why are you doing it when this is a business model? And that's the reason I use the analogy. You don't run a McDonald's and hoping somebody walks and gives you $5,000 for a hamburger. It's not going to happen. Why would they? Respectfully, that's how a lot of you trade, though, as retail, because you don't have a systematic approach. And that's why Josh and I both will give you, and Chris, we're not so concerned with what you do, it's the consistency in which you do it.
Yeah. And
everybody I work with, and Chris, Josh, you both can comment on this. That's what leads to a lot of trader success. It's consistency. Just like, why is it, I don't know, up in Tennessee, what's your favorite restaurant to take your wife to? Josh, and I'm sure there's a reason you've gone there for 20 years with her, because they're consistent. Everybody wants consistency in everything else in their life, but you don't hold yourself accountable to it as traders. And then you wonder why you struggle, because you don't have a game plan. It's just a killer of traders. It doesn't need to be, but I see the dark side of it. I see the other side. There's some working with traders privately so much that I see the habits, and they'll say something. I'm like, we got to stop. You're killing me. And they'll see it. One more story on this, and I'll let you guys chime in. I have a client I've worked with over the years. Their own rule set was, I take profit at X amount and I risk X amount. I'm like, okay. And I said, so have you documented this out? Because they're struggling. So I made them go back and document all their trades. They had nothing to do with Scott. I said, I just want you to go back. You were picking the stocks. You were picking the entries. If you had just taken, and Josh has just told you this, this is one of the biggest keys. That's what I do to turn traders around. If you just took your profits at the levels you said and you maintain your risk, they would have had multiple 6 figures more in their account in the one of the previous trading years than they did, as opposed to having an upside down year. Do you know how hard that is to stomach for me? Because it was their rule set, but they didn't have the discipline. You may know what to do, but you're not actually doing what you say you're going to do. And here's the kicker. If you would subcontract to somebody to work on your home, fix your car, and they had done it, you say, I want my money back. But how many are you going to ask yourself for money back or refund on your behavior? You won't, because nobody wants to measure themselves. This is why people always say, I always talk, it's a journey, it's not the destination, because that's what trading is. There's a reason my website is called what it's called. It's a road. There's no end game to this. There is consistency, there's discipline, there is a process you can take, but there's a lot of different strategies we can do. There's as many of those as are stars in the sky. But the holy grail of all my traders is always a system that they can replicate, they can do in their terms. Just like Chris said, he has his way of picking stocks. Josh does, I do, and so does everybody else. Everybody doesn't trade stocks, by the way. A lot of people trade interest rate moves, and it doesn't be complicated is what I'm trying to get at. Does that help?
Yeah, we're actually programmed to lose. I just shared this content in level 3. Let me pull it up here for you guys.
I was going to bring that up as well. It's something we just talked about in Foundations of Trading as well, one of the more advanced classes.
Yeah, so a lot of you guys are familiar with dopamine already, the neurotransmitter that acts as a messenger of pleasure. Don't think about that too long, Scott. Plays a key role in our brain's reward system. If you have that happy feeling, that's dopamine. But here's an interesting study for y'all, and I put the link down there at the bottom. They did some analysis on this, and they said when you have a new experience in life, it looks like this with your dopamine levels. You see a signal, you do the thing, and then you get the reward and you're happy. So your brain says, okay, that's interesting. I do the thing, and then, whoo, I feel really good after I did it. Maybe like starting a new workout is an example of that. Then what they discovered is over time, as you continue to do that sequence, you'll see the signal, but you'll actually get the dopamine hit before you ever do the work. Maybe a workout's a good example. Some of y'all are like, I get depressed when I think about working out. But those that enjoy working out, like you've learned that there's going to be this endorphin rush that occurs after you work out. And so, boom, your body gives you that dopamine spike, even just thinking about going to the gym. You get excited about it. Maybe there's other activities you do, you get excited about just thinking about. All right. Here's what's interesting about this, though. The scientists later went on and said, what happens if we don't make this a certainty and we actually create a variable reward in here? What do you think happens to dopamine levels? They didn't just increase, they skyrocketed. If you mix in a variable reward with some type of activity, your dopamine levels go up exponentially. And we can see this as people sit in front of not a vending machine, what are they called? Slot machine in Vegas. If you go to Vegas and pull the slot machine and you win some money, you think, I just won some money in the slot machine. And you're excited, right? And you get excited about the prospect of doing it again and doing it again. However, if you were to go to Vegas and every time you pulled the lever on the slot machine, 50 cents came out or whatever it is, how many days would it take until you said, this is starting to feel a lot like a job? My job is to come pull the lever and cash spits out. That kind of is what our job is, right? Like you go and you do the thing and we pay you. That's how the job works. And so it doesn't turn into a dopamine spike. It actually lowers our dopamine levels and we get frustrated, like, oh, I got to go to work again today or whatever. But you make a game out of it. All of a sudden, your mind is saying, I like this. I want more of this. I will go lose all my money in Vegas because it's a variable reward. Now translate this to the stock market. Let me get through my slides here. Over time, blah, 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 variable reward significantly increases our cravings. Here's an example. And this is a real example that happened. I think we actually talked about it here a few weeks ago. Thursday morning at 8:20 a.m. Central, I posted a trade idea on Jets. By the way, that's why you all should be in Discord, because we post amazing trade ideas like this in there. Soon the trade triggered, closed slightly profitable for the day. Candidly, I owned a put option on it. 3 days later, Jets gapped down to the target, and I thought, this is about to get really good. So you can see my green line here was the target. This was actually the Russian invasion of Ukraine is what caused it to gap down there. Do you think I exited my trade? No. Right? I was like, this thing is going to go down. Because remember, the white candle wasn't there when this opened up. It just gapped down to here. And I'm like, oh, baby, I am going to 95x this trade. I'm rich. Anybody else have that thought ever? It didn't do that. It closed up higher. And then 3 days later, it came back down. And I actually exited right on this wick right there, right where my original trading plan was. I went ahead and got out. So what's interesting, though, is we started talking about this in group coaching. And later that day, I got private messages from people saying, should I exit now? Like they had come all the way on down. They got the big 3, 4, 500% return on the option. And then it was starting back up, and we were actually right at the same spot. And what was interesting is to go back and look at this in relationship to that dopamine study is it actually was chemically in their brains more exciting to sit through that big drop and see the big 400% return and then see it going down. Like, do I get in now or get out now? Or, it was more exciting to not follow the plan than to actually do the things that we said we were going to do. So when Scott says, we're inconsistent in our trading, part of me takes pity on people. And that's just one. We had 3 different studies in that training that we talked about. Part of me feels pity because the game is kind of designed for us to be inconsistent. Another example is if you ever made money on a trade that you knew you shouldn't have taken, or you lost money on a trade that was perfectly qualified in your mind, those are, what's the word? Contradictory is not the right word. What is it where two things cannot be simultaneously accurate? Quandary. All these words are coming to mind that aren't the right word. Point is, you have to rationalize that in your brain somehow. I made money when I did the wrong thing. I lost money when I did the right thing. What are you inclined to do? Right? Start messing around with your trading plan. And that's a recipe for disaster. Consistency. Keep hitting the ball the same way every time, so that if every time you step up and you swing the golf club and it goes in the woods, we can take a look at how you're swinging the golf club and make some changes. But if every time you're doing it left-handed, right-handed, swinging through your legs, whatever, like there's no opportunity to say, all right, let's refine this little piece of what you're doing. So anyway, I probably took way more time on that than needed, but you have any additional thoughts you wanted to bring up, Chris? I hijacked your idea.
It's funny that you brought that up, because the first thing that I thought of as soon as you started talking about that was that Morning Glory setup the other day that was not qualified at all, but I didn't know that. And so yes. I ended up getting into a trade for the wrong reasons, and then luckily it made money, and that's probably even worse, is that I made money on a bad setup, right? So taking a trade I shouldn't have taken and having it work out. And this is one of those things that, like, I've talked to people in the the option stuff that I've done as well, is that, like, just because something works out doesn't mean it was the right decision. And just because something doesn't work out doesn't mean it wasn't the right decision, right? Like, you can't judge the quality of the decision by the outcome. And I think it's a logical fallacy that we are naturally inclined to make. Well, it worked out, so it must not have been the wrong choice, right? Or vice versa. And that's something people should just be aware of and try to avoid. I did want to try to go over, I can't believe we've been going for almost an hour already, but I was hoping we could go over maybe a couple setups if we have time. I'd love to share a really simple scanner that I have as well. Josh, you brought up one of yours before, the stochastic crossing below 20. I've got one that I look at with average volume and stuff that I use to just kind of bring up some stocks to look at when I do power traders. So I wouldn't mind sharing that if we want.
Yeah, we can go a couple minutes longer if needed.
All right. Let's see.
I'm trying to figure out what that word, cognitive dissonance. That's the word I was trying to remember. Cognitive dissonance says you can't have 2 opposing thoughts both be accurate.
So sweet. This is a very simple scanner. Now, again, let me just emphasize, this scanner is not to find stocks that, like, you should go trade all the stocks that show up from the scanner. This is showing me stocks that they meet a few criteria, and then I go and analyze these stocks. Okay. So don't just go set up this scanner and then complain when they don't all go make $1 million. So let me just kind of explain like what's going on with the scanner here. I wanted to ask as well, so you guys had talked about looking at minimum volume, which is something that this scanner looks at primarily. Do you also, Scott and Josh, do you guys also look at market cap? Because that's something that I do as well. Do you guys filter for that at all?
My workflow is to filter out the stocks that fall below 1 million shares, and then I sort the remaining list by market cap. So I start with the highest capitalized stocks and work my way down.
Yeah, there's one thing about, I want to bring this up. For those of you who are looking for a lot of times these really explosive moves when you find something that's not, there's a small market cap and it's kind of under the radar. Hedge funds, once they decide they want that, think about what's available for, you know, out there they can purchase and how under owned it is. And if they've got to start to own it, a lot of times you watch these stocks get juiced. I've got a buddy of mine, that's all he looks for. Again, it's a little bit outside the scope of what we're doing today, but just something to put in the back of your head. Okay. But yes, Chris, yes, the answer to your question is yes, this is something we do filter for.
Cool. So this very simple scanner, just to kind of give me some stocks to look into. First of all, I look for stocks that have weekly options because I like to trade weekly options. So that is one thing that I'm starting with, is just show me stocks that have weekly options. Then the next part of this filter is show me stocks that have at least 20 billion market cap, right? So I'm filtering out those small companies. Again, if you want to trade smaller companies, this isn't the scanner for that, right? So just be aware of what you're looking at here. The next step of this scanner, these two have to do with volume. So what I'm doing, this is kind of like what Josh looks at here. Again, I do as well. I'm looking for stocks that have average volume greater than 1 million shares. Okay, so this is just on average over the last 20 trading days. Is their average volume over 1 million shares? Cool, so that tells me there's enough liquidity there. The next one, then, this is where I'm more getting into the qualifier that makes this special is, does the stock have higher than average volume? That's what I'm looking at, right? Is it at least 10% more volume than its average over the last month? And that basically just tells me that there's a lot more trading going on in that stock right now. Again, doesn't mean the stock's going up, doesn't mean the stock's going down. It just puts it on my radar to go look at it. It tells me there might be something interesting going on there. And then the last thing here is just seeing that they don't have earnings coming up in the next couple of weeks. So I just avoid that volatility. So this is a really simple scanner that you guys could do something along these lines. You know, if you're a beginner trader, just to kind of get some stocks to look into, because that was one of the things that I struggled with when I was first starting trading, was like, I didn't know what stocks to look at, right? Like, I'm learning all these indicators and things to do my analysis on, but I didn't know what ones I should spend my time analyzing and which ones I shouldn't. So this is a very simple scanner that can at least just give you a starting point. And it has nothing to do with any specific strategies, right? Like if you're looking at indicators to trigger different moves, this is just to kind of give you a generic list of stocks that will, you know, that are essentially in play. They've got plenty of liquidity. They've got plenty of market cap and everything. And then you can go ahead and do your analysis on that list of stocks that it spits out. So I'll go ahead and stop sharing, but that's one of the things I wanted to share.
Before you stop sharing,
Sure.
If you guys want to take a screenshot of that, and that's a good way to capture it. And the Thinkorswim scanner is so much more powerful than TradingView. It's one of the reasons I signed up for TD Ameritrade, so I could get access to Thinkorswim, because Chris is teaching me a super secret strategy that we're going to be revealing in a few months. But the only way that I could scan for that was on Thinkorswim. So it's a really great platform. I'm sure you could do similar things on TradeStation, which Scott uses. It's also very powerful.
Oh yeah, there's nothing crazy going on here. I mean, it's a very simple scanner. I'm sure you can do it on TradeStation. You could probably do it on TradingView. I just haven't looked.
You could probably write custom code. They're a little limited in the like you have to play within their framework, and they don't necessarily give you all the choices of things that you're going to scan for. Like, I'm not sure. I don't think there's an unusual volume scan. I'd have to go look.
Yeah. All right, I'm going to go ahead and stop sharing. Hand it over to you guys.
Yeah, right at the top of the hour. Amazing. We've had great attendance. We had lots of interaction on the YouTube. You hear me talking about it like I'm a boomer. I think I am actually close to it. Scott definitely is. I'm on the bubble, the boomer bubble. Anyway, lots of great interaction. We're gaining traction here. It would help us out a lot if you guys liked the stream, whether we're in real time here or you're seeing it after the fact. Comment on it. You know, do all the things that makes the algorithm happy. Just engage in it. I've even heard that thumbs down. Like, if you hated us, like, we actually appreciate that, because it tells YouTube that we're polarizing, and it likes polarizing content. And we're trying to do more and more of this. We want to meet you guys where you're at. We want to add value in your lives and be able to help you make consistent progress. We call it constant, never-ending progress towards your outcomes. As I've said oftentimes on the channel, I believe that when good people have more money, they can do more good things. And everybody that's on this call, Scott, Chris, I put myself in that category. We all want to see you guys do well. We want to see you put cash in your jeans, and we want to see you go out and use that resource to do impactful, good things in this world. So blessings on you, Chris and Scott. I'll let you guys sign off in your own way, but I'm glad you all spent the last hour with us. We'll see you next week. That was your cue to talk,
Sure.
Scott.
Yeah. I wasn't sure if Scott was going to go first, but I'll just say thank you guys for watching. As always, hopefully you got some more useful nuggets out of this. We'll be back next Thursday as well. And if you guys have some topics that you'd like us to cover, we're definitely open to suggestions. So let us know. And yeah, Scott, you want to close us out here?
Yeah, I will. I appreciate you guys and appreciate being here today. I know you guys are giving up time to spend time with us, so it's greatly appreciated. When we get to next week, I'll address some things I'm going to show you guys related to longer term analysis if y'all want to do that, and how to do some bar structure inside of bars. And we can touch on that at some point in the future as well. Thanks, guys, girls. Appreciate y'all. Thanks, Josh. Thanks, Chris. Later.
See you guys.
Bye.